This is a tutorial to walk you through ledgers. So you'll see we've posted a new uh, note on it. Full disclosure, this is a little bit cumbersome. So I think I have to teach you this concept, but I think we're going to do this, learn it, and then put it in the rearview mirror and never use it again because you're going to see it as a little bit cumbersome. So let's get right into it. So what I've done here is I've taken a journal that we did earlier in this unit. I've modified a couple things, taken out a couple of accounts, but you will recognize some of these accounts from earlier in the unit, and this is the completed journal for it. And now we're going to take our journal entries and we're going to put them into individual accounts. Really, this is glorified T accounts is what we're doing. So here's how it's going to work. On March the 1st, we had cash sales of 12 grand. So we did that in our ledger. We debited cash, credited sales, quick explanation, a couple thousand or $12,000 in each. Now if we go on this second tab at the bottom, we're going to see a cash account and a sales account. I know I need to debit cash 12,000 and sales 12,000. So I go to my ledger. I'm going to go all the way up to cash. I see it there. The date is March 1st. So here's the details of how we do it. And I'll blow this up a bit so it's easier to see. So we go March 1st. Note in the particulars here, we're not putting the details of what happened. I can see that in the ledger. All I'm going to say is this is the opening entry. That way, if someone's looking at it, they're going to know that there's no other ledger anywhere that they need to look for. Now, this PR stands for posting reference, and this is where we're going to link the journal and the ledger together. So the PR in this case means which page of the journal is it on. So if I look here, it's not a designated page yet. So I'm going to put page 1 because that's the first page of my ledger or my journal. And now when I look, I'll just put J1. That stands for journal 1. There was a debit of $12,000 and my balance is this. I'm going to show you a little math calculation in just a moment as well. So that's to my cash account. You'll see there's a number here, account number 100. This business just calls cash account number 100, so I can reference it. So actually I can go here and every time I see cash, I can put in account 100. And the nice thing is we can then cross-reference. If we made a mistake somewhere, we can look at every time we see that account and just throw it in there. All right, so I've done my cash. Now I need to do my sales. So I go now to sales, which is right here on March the 1st. We had an opening entry on journal page 1, and we credited sales 12,000 and so on. So now I have a credit balance of 12,000 in sales, which makes sense, and a debit balance of cash of 12 grand. That makes sense. On we go. I keep hitting that. Sorry, everyone. To the journal. So the second transaction, we had supplies that we bought on account for $750. So let's go here. I'm going to find my supplies account on March 2nd. I had an opening entry on journal page 1, $750. And then I bought it on account, so I'm going to go down to my accounts payable, March 1. Good, and then I can see payables is account 200, supplies is account 101. So I can backfill those. And I know that sales is account 400 just from memory, so if we go on the journal, we'll see that. Is that okay? Utility expense, I know this is account 500 again because I set up this template. And cash for $500 each. So I'm going to debit the expense, credit the cash. So I always find my debit first. So utilities expense on March 3rd. The entry, journal page 1, and the expense was for $500, I think. Just let me double check that. And then I'm going to credit cash on, I don't have to put the month again. I put nothing in particulars because there's nothing I need to do. If I want to know what happened, I can just look at my journal. It's for $500. And here's a little formula you can use, everyone. It's really simple to use. So if I'm doing debit accounts, which are my assets and my expense accounts, here's what you're going to do. You can hit equals on your keyboard. You're going to click the balance, the opening balance above. In this case, it was 12,000. Then you're going to do plus, and you're going to click this open debit box, which doesn't really make sense, but if we have a debit, it's going to say I want to add something there, and I also want to subtract anything from my credit side, and then hit enter. So I'll show you that again because this is going to save you a lot. So equals the balance above plus any debits minus any credits, and it's 11,500. I know you could do that in your head, but this is going to actually be handy later on down the road. Okay, let's continue on. We'll do a few more of these so you get the point. So cash and capital, $20,000. I know capital's 300. So what was the date? On the 4th. J1, we got a $20,000 investment. Now look what I do. I'm going to click on that 11,500. You're going to see this little circle here. If you put your cursor there, it'll turn to a black cross. If you just click and drag that down, it's going to automatically do your formula for you. I made a mistake here, and it allowed me to see that because the owner invested money in the business, which is a debit to cash. I'm going to go down to capital. The date was March 4th, right? Entry, journal page 1, $20,000. And then a couple more transactions. So in the next one, the owner took out $1,000. So we'll go to drawings. That was on the 6th. And then we know we need to have a credit to our cash. And then I'll just carry this balance down again. Again, doing this ensures I'm not going to make any math mistakes, or at least I hope I'm not making any math mistakes. And then finally, we took out a bank loan for 30 grand. This account is account 301. Bank loan is which account? 201. Okay, so let's finish this out. So this is going to now be my final balances, and on the 7th, bank loan. So what I've done is I've updated all of my accounts. Again, this is kind of like what we did in a T account, and to be frank with you, after we're done this unit, we're going back to T accounts because they're just so much easier to do. But we can see the detail here, so now I can cross-reference. So it's saying on the 3rd of March, on journal page 1, there was a credit of $500. So if I go to the 3rd of March here and I cross-reference cash, there was a credit of $500 because I paid a bill. So there should be, under utilities, a $500 debit. So under utilities expense, on the 3rd, there's a $500 debit. So it creates a bit of a check and balance for us. If we've made a mistake in our journal somewhere, we can check our ledger or vice versa. And that's what we'll do. So I'm going to do one very quick exercise, and then I'm going to give you an assignment to do on this, and then we'll put this more complex form of ledgers to bed. We'll continue to use the journal throughout the semester, and then we'll also be using T accounts as a form of ledger. All right, good luck with this stuff.